Welcome to the Real Estate and Wealth Podcast, your go-to resource for navigating the world of real estate investing and wealth creation. This podcast is brought to you by Calvert Home Mortgage Investment Corporation, your trusted, caring, and responsive short-term mortgage lender in Alberta and Ontario. We explore strategic and tactical solutions to elevate your real estate portfolio, drawing insights from seasoned Canadian investors and trusted advisors. In each episode, we dive into various aspects of real estate investing, including market trends, property analysis, financing strategies, risk management, and much more. Whether you're a seasoned real estate investor looking to expand your portfolio or a beginner taking those first steps, this podcast is for you. So today on the podcast, we have Nazia from National Bank of Canada. Really excited to hear what you have on the go. I know our investors are really looking for creative solutions and really looking forward to understand how you help serve real estate investors in Canada. But I guess maybe a bit before that, just curious if you want to give a bit of an intro, how you got into mortgages in order for the audience to learn a little bit more about yourself.
Yeah, thank you, Ryan and Alicia, giving me this platform to share my 10-year of residential financing experience here in Canada. Just to give you a little bit of background, that I moved to Canada in 2011. English is not my first language. So I started working with National Bank. First 2 years, I did financing and I did investments. Then for the last 6 years, I've been doing purely residential financing. I've been helping a lot of clients. I almost help 150 families every year. And what really makes it special for me that I see a piece of myself in pretty much each application, because I was newcomer, I was first-time home buyer, I bought my first rental property, I refinanced, took equity out from the primary residence to buy my first rental, then took equity from rental to buy another rental property, then upgraded primary home. So you see, I have pretty much lived every experience that any young Canadian will go through in terms of owning a home or having a rental portfolio.
That's awesome. Amazing. And your properties are here in Calgary? Your
Yes,
rental properties?
Calgary and Edmonton, all in Alberta.
Nice. They're single family detached homes or duplexes?
So it's a mix. When we started, we bought a few townhomes, then upgraded to detached home. Now recently we bought properties that have legal basement suites just to maximize on the cash flow, because with the legal basement suites, kind of you're going to double your cash flow.
Mm-hmm. For sure, definitely.
So financing for investors can be a little bit tricky sometimes, door limits and all those sorts of things. So can you talk a little bit about National's programs for real estate investors? Like, do you have a limit on how many doors, how much money someone can have with you?
Yeah, sure. Just a little bit on a National Bank that, we were established in 1859 in Quebec. We are the sixth largest bank in Canada. And on June 11th, we just announced acquisition of Canadian Western Bank. Just to give you a little bit of magnitude of the change, that we have 6 branches in Western Canada. With this acquisition, we're going to have 36 branches. So our footprint will pretty much grow 6 times. We have a really investor-focused financing program where we can finance up to 16 doors under your personal names, under your holding company.
That's awesome.
This is, I tell you that this is a game changer for a lot of investors because 16 doors is a lot.
That's huge.
It's huge. And I'm part of the team that we can finance people who have 56 doors in total and then 16 with us.
So how does that work? How does the 16 versus the 56 look? After you approach the 16, how do you get to the next point?
So we are capped at 16 with National Bank, and we are capped at 56 doors under residential. Once people get to that level, then we have to transition them to the multi-unit. So then it comes under the corporate, but under the residential financing, which basically rates are more favorable, then it's 16 doors is the cap.
Amazing. And these are any province in Canada?
Yes, any province. And 16 doors is basically, if you have a property with legal basement suites, it's considered 2 doors.
Okay. And if it's not legal, it's illegal, you consider that you just go based off of the income of one.
Yes.
What the house could rent for versus up and down.
Exactly. So if you have a single family home, no legal basement suite, considered 1. Mm-hmm. But if you have 8 properties, all legal basement suites, it's 16 doors for us.
Okay, very good to know.
Good to know.
And I know you mentioned clients are able to do this in a corporation. Do you need like 2 years company financials, or can I literally open up a corp today and then purchase the property, say, in a month down the road.
Yeah, another game changer is that you can come to us, you can open a new holding company, and we will be able to finance that. But obviously, it comes with certain guidelines. When it has to be a holding company. You cannot run an active operating business in that company. So it should only hold your real estate. It should hold all the revenues and expenses related to real estate only, and it cannot be part of any operating company. It has to be independent. So you open a new holding company, you are director, for example, you have another partner, you both are directors. Obviously, there's no company in the holding company because you just established it. So we're going to base the application based on the income and net worth of both the directors.
Okay. And is there a certain limit for, like, you're buying a property worth $1 million, for example? What's the net worth relative to the purchase price that you're looking for?
So it's not just net worth. So there's no limit on the purchase price when you're buying under holding company. I have clients, like professional clients, who would even buy their primary residence under a holding company. So there's no limit in terms of purchase price. LTV is the same as it would be when you're buying under your personal name. But the qualification criteria is the same as it would be for any personal application. You have to meet the debt to income ratios. And if you don't meet that, then we look at alternative in terms of increasing your down payment or, having a co-borrower.
Okay. So for all of this, the underwriting's based off of the individual versus like the income approach for the asset itself.
Yeah, it's good for the investors, especially new investors, because they're not at the point, they don't have financial statements for the holding company, but they can still start buying under holding company based on their financials, their income, and their assets.
Okay,
Yeah,
interesting.
that's really good.
That's another game changer, Ryan.
Yeah,
I'm telling you.
yeah, because I'm in the process now. I'm meeting with an accountant. Like, when's the right time?
I
'Cause
can
you always ask the question, when do I open a corp? And everyone says, well, it's very situation dependent. I can't give you an answer until you give me more information. So
You can
very
open
good
it
to know.
tomorrow, and
Yeah.
Tuesday morning I can submit your application.
Would you say most of your clients borrow through a corp or in their personal name?
So I see a mix. I'm seeing this trend a lot more buying under a holding company now, since we have a lot of out of province clients coming here. And I see a trend also in professionals like doctors, engineers, and accountants. They are buying more under holding company. I see a lot of professionals even buying their primary residence under holding company. But for normal folks, just regular, I see that they would prefer to buy under their personal names.
Makes sense.
Because going forward, taxation is different in holding company and personal name. So
Yeah, with the whole
Yes.
inclusion rate change.
yeah,
And
so
yeah.
so that's the main. But for someone who's a newcomer buying their first home, probably buying under their personal name would make more sense.
So, speaking of that, in terms of buying your primary residence versus a rental, do your mortgages look different? Your rates and terms, anything like that, or are they the same?
So there are certain guidelines, because certain policy guidelines would remain pretty much the same, which is qualification, debt to income ratio. So that would remain the same whether you're buying your primary residence or rental. Certain things will obviously be different. Sometime rate could be slightly different. Primary residence, if you're buying as an insured mortgage, you know that in Canada you always get lower rate when it's an insured mortgage. So difference in rate a little bit, but we are very generous in terms of amortization as well. On rentals, we give 30-year amortization. On primary as well, you can have 30-year amortization. In terms of qualification, pretty much same guideline. We can also use the market rent, like a future cash flow, to offset the mortgage payment. So that's another advantage for clients. And now we see this new, just because of how expensive properties are and how high the interest rates are, we see a lot of newcomers or a lot of first time home buyers are buying properties with legal basement suites just as a mortgage helper. So that also, like, it's a combination of primary and rental. It's your primary, but it has a rental cash flow. So we can also use the market rent for the new property to offset the mortgage. People are able to approve for higher amounts.
Very cool. I know something that I personally do. How would you take this into consideration? Like, I have some of my properties detached garages where you rent those out separate. Would you consider that income, or is it only if it's a legal up down?
So we do consider it if
Yeah.
it's a legal suite.
Okay, but you wouldn't consider the garage income.
No, so if you have a suite on top of the garage, or you're renting your garage separately?
Just garage separately. Someone's storing cars in there.
Yeah, no.
Would not consider that. Okay. Good to
Not
know.
for now, but
Yeah.
it's
Yeah,
things keep changing.
for sure. And then what are the typical like GDS, TDS
So GDS
numbers?
TDS is 3944. So GDS has to be 39.
Mhm.
The total debt servicing cannot be more than 44. But then again, it's not the last absolute word. So for example, if your GDS TDS does not fit into the box, then we also go and look at other avenues, other options, so how we can basically mitigate the risk for the bank. At
Mhm.
the end of the day, the GDS TDS is there for a reason. The bank wants to mitigate their risk. If we can find another factor in the application to support why the GDS TDS is higher, we can always get the approvals. So, we do not like just look at just the numbers. We try and look a little bit deeper why the TDS is higher. Sometimes people have co-sign on the property that their parents are living in. Sometimes people are holding two mortgages for temporary. They don't want to sell their home until the new house is ready. So, it basically case to case basis.
Yeah, and I think that's huge. I know working with some of the big banks, like if you're not within a certain box, it's an automatic decline. There's no flexibility, and obviously, with affordability worsening and just real estate investors looking to scale their portfolio, having creative solutions is definitely something that's appreciated in order to keep growing and scaling.
Yeah, I tell you one thing that this is something it's coming straight from my heart is that I feel that National Bank we have the personal touch because we're neither too big to not care or not too small to not be competitive. So you know what I mean? That we have the scale, we have the system, we have the product to be competitive with any other big bank, but at the same time we don't lose the personal touch.
Yeah,
Well,
that's
and I
huge.
can vouch for that because I have 3 mortgages with National, and I can
Okay.
say that I felt like I could be very transparent with what I was doing, renovating the properties. I'm planning on refinancing them, legalizing the basement suite, whatever it is. I feel like I could tell you the whole story and you'd work with me to try and build that portfolio. So I feel like it's a really good option for real estate investors.
Yeah, no, thank you. And I tell you one thing, Alicia, that, I really enjoyed working with you too, because, some of the clients you always remember because they're so organized in paperwork and you, and I don't see that often, believe me, that, that's one thing for the investors that if you want bankers to love you, please then have have your paperwork in order. And that's the reason, I always loved working with you guys because I could also, rely on you that I'm going to ask for a document and I'm going to receive it. It's not that, it's not coming for 2 weeks.
That's a good tip for real estate investors. Just have a Google Drive or whatever you have with all of your documents ready because you never know when you're going to need them.
Yes,
Yeah, the stuff
Minty.
we see on a daily basis
Yeah.
is screenshot here, another screenshot there, no label on it. It's just
Missing documents.
Yeah.
And then the classic is the mobile screenshot, that's just a screenshot. There's no name, nothing.
Yeah.
Sorry, client, can't accept that. Please, yeah, we text it to you, not through email.
Yeah.
Too funny. So, clients who are actively looking for properties, what's the typical turnaround time like? Like, say if I complete an application today, I put in an offer. What does the timeline look like for getting a response and quick to funding?
Yeah, timeline also depends. I always tell clients to be ready. Do your pre approval first because I have seen things come up on their credit bureau that they were not even aware of. So I had few clients who moved from other provinces. They left their condo. The property management company sent them a cleaning bill for $120, which they never received. It's showing on their credit history. So it's always a good idea to get your pre approval before you make an offer. Have the down payment ready. Work with an expert that, if you are ready, then you would know that once you make an offer, approval should not take more than 3 to 5 days, including the appraisal. If we have all the documentation, a turnaround time is pretty fast. 2 to 3 days, we can get the approval done, but we need to have the documentation.
Yep. And what documents is included in pre-approval? Is it just an application or?
I always take full documentation from clients at pre-approval because I just want to be sure that they are ready. I don't want them to make an offer, then I ask the document and then it adds to the timeline. Generally, I ask for full income documentation, depending on how many income streams they have, then full proof of down payment. Sometimes down payment they're planning to take from another property. They want to take an equity out. So have the approval for the equity takeout before you make an offer on the other property.
And that's something else that I was going to ask is in terms of the down payment, does it have to be cash or equity from a property, or do you accept anything else like line of credit or anything like that?
So for down payment, there are quite a few options. So we accept coming from home equity line of credit. If you have a home equity line of credit, you can take equity out from any of the existing properties. You can also have your like your cash, your TFSAs, your savings that you have. Another type of we are seeing a lot these days gifted equity. That's only if you're buying from your parents or grandparents, they can gift you equity in the property. One thing which is very popular in Ontario these days is self-build. Just because how expensive the housing is, people are buying their own land and they're building houses themselves. So we also take the borrower work as a down payment as well. Even insured like Canada Guarantee and Sagen, they also accept as the down payment. So we can do insured 85% LTV for self-build.
Interesting. So you're doing new build construction at
Yes.
85. Wow. Because we've been getting a lot of calls for
Yeah,
that.
a
And
ton of
probably like
calls.
2 or 3-ish minimum a day.
It's coming. It
yeah.
will come because we're seeing a lot in Ontario. People are self-building just because how expensive it is. I think it will come to Alberta soon.
Yeah, no, we're definitely seeing quite a bit of it currently right now, mainly in Edmonton. I guess quite a bit in Calgary as well,
Yeah.
too. Yeah, definitely lots of people looking to build.
Yeah, we do self-build. We also do draw mortgages if you're building with a builder.
Do you see a lot of inquiries for laneway homes, garage suites, whatever you want to call them? Do you see a lot of inquiries for those? Is that something that's trending right now?
Yeah, a lane home with legal basement suite. You go to any builder in Calgary, they have sold, I think, for the next 10 years already.
Oh, yeah.
They don't have any lots. And same in Edmonton now. You go to any builder, they don't have any lane homes left. Just because
Yeah.
that's affordable. Plus, you have a mortgage helper as a basement. Look at how the rates are.
Yeah, it's tough nowadays.
It's tough because when I started doing mortgages, I would hardly see a mortgage over $500,000.
Mm-hmm.
Now I hardly see a mortgage under
I know,
$500,000.
probably shot up like 200 grand over the past like 2 years.
2 years.
Yeah, 3 years. It's wild.
But people have made a lot of equity in the houses as well. And I've also working with a lot of who were first-time home buyers just 3 years ago,
Mm-hmm.
and now they are investors. They already have 2-3 properties just because all the appreciation in their primary home, we were able to take equity out from the current home, and they bought rentals for them.
Yeah, I fall in that boat. If it wasn't for the increased equity gain, like such a saving grace. I know everyone says go off, buy for cash flow, which definitely the principles, but it's crazy what the equity gain over a little period of time can do. It's wild.
It's our turn, I think. We
Yeah.
waited long enough.
Yeah, very true. Clients of ours are always curious on, creative solutions. Will you consider vendor takebacks if there's a mortgage behind you?
No, we don't take vendor takebacks, not for now.
Okay. And do you allow second mortgages? Just say if they've had a mortgage with you for 2 years and they're looking for a second, will you allow second mortgages behind you?
So we allow second, for example, we will go first on the title for the
Mhm.
clients. And if they go to another lender,
Yeah.
that lender can go second. But we don't go second on any of the mortgages. But if you have a mortgage with us already and we want to refinance and we want to increase the registered amount,
Yep.
that we always do.
So you'd recommend,
Yep.
clients go to you first.
Yep.
Hey, this is the scenario, looking to pull out X amount.
Yep.
Just see if it's feasible, obviously. If they already
And
have a
it saves them
mortgage.
money because the way right now is that most banks in Canada are doing collateral charge on your land title. So they don't register the mortgage amount. They registered your purchase price on the land title. So if you bought a property, let's say for 700,000, your mortgage is 500,000, bank will register 700,000 on the mortgage. How it helps you is that in future, if you want to get $200,000 more, you don't have to pay legal fees because bank is already covered up to 700,000. That's what we do. That we do a lot of equity takeout, and people literally don't have to pay anything. Most of the time, we don't require property appraisal because under 1 million in Alberta, we don't require property appraisal unless it is triggered by the system.
Interesting.
So if my mortgage is 500, like you said, and you register 700, I can just come to you and say I want to access that equity in there when it increases.
So we'll have to qualify. We'll have to re-qualify you. The only thing that is that you don't have to pay legal fee, but you have to re-qualify for the additional amount.
Okay.
Mhm.
Appraisal is yes. So appraisal is that we our system is linked with CMHC database Emily. So it does the instant evaluation for all the properties that we submitted, and if system thinks a fair market value, we don't require property appraisal. Sometime in older neighborhoods, because some properties are renovated, some are not. So then it's hard for system to evaluate. Then we require property appraisal.
Okay, very interesting. And is there a minimum credit score that you're looking for?
So
Clients are
credit
applying?
score, also it's like more of a gray area because CMHC they are now just looking at 600 and above. Generally, we want over 680. We have certain products like if you want a home equity line of credit, you're looking for 700,000 or 700.
Yeah, 700. Whoa, what's that?
700, but okay, you're gonna add it.
No.
700, but I'll come back to the same thing that we always look deeper. I had a client that we were doing home equity line of credit, and same thing that that $120 cleaning bill was on his credit, and his score was 660. We were able to do home equity line of credit because we look deeper into it. It's not because that he's missing payments, it's just because one instant.
Mhm.
So we do look at credit score, but always go deeper.
Makes sense. Awesome. I'm just more curious about your personal journey, hearing the properties that you're investing in. Do you have any tenant stories or any learning lessons from your journey investing in real
Yeah,
estate?
a lot of clients, they come to me and they ask me, and I just give one disclosure, which is that I'm a risk taker by nature. So don't don't take my advice. Just filter through it. So we started buying. So we moved to 2011 in Canada. So we bought our first home in 2013. After that, we bought our first rental in 2015. That was the time in Alberta that these townhomes you were not able to even rent for 1,400. So I remember that the first rental property that I bought, and we had the tenant, we handed over the keys to the tenant. I did not sleep all night. I was just on Google. I was just like an FBI agent trying to find, what is he going to do with my house? What's happening there? Because thing is that, once you hand over the key, you cannot enter your own house. So that was our first rental property. And then we bought another one. We have now 7 rental properties. But now we are at the point that sometime, the builder's calling, you want to come for a walkthrough? We're like, no, we are good. But it's been an interesting journey. And mainly that, I would say that what helps is working with someone who knows, who can guide you through the process, because it comes with a lot of financial responsibility, especially owning a rental property. There are a lot of costs involved. Like I said, that during COVID, I remember 2 of our tenants, they refused to pay rent, and they would say, "Oh, you go to your bank and ask to defer your mortgage." You could not do evictions. So things like that can happen even if there's no COVID. If someone decides not to pay you, it takes 3 months to get eviction notice. So you need to be financially ready to have that rental property because you need repayment capacity on yourself. And that's why when we are working with new investors, I always ask them that, what's your fallback? What if you can't rent your property? Because it's not right now, it's great. Right now, people list it and they have 29 applications and it's rented. But I have seen the time that townhouses, 1,300, 1,400, you could not rent for 1, 2 months. So, you just need to be ready for these kind of situations so that you have repayment capacity. You have built some emergency funds for yourself. So, as long as you're financially ready, you should be good.
That's why it's a good idea to always build, a vacancy room into your cash flow numbers.
Yeah.
And just, because your unit could be vacant for a month. Someone could damage it and you need to take some time to clean it, whatever it is. So that's definitely, there's a risk to it, risk and reward, right? To the process.
No, you're totally right. And that's why, banks, they have these guidelines and policies for a reason. It's like save me from me. It's risk taker people like me need to be saved. So it's just that we have a vacancy rate that we built into the applications for rental properties because that's a reality. So you need to have those guidelines. As long as you're prepared, I feel that, a lot of people, they come to me and they want to put 30, 40% down for the first home. And then, you always it's my, I feel that my responsibility to let them know that there's another avenue as well, that you can invest in a rental property, but this is what need to do to ensure that you are successful.
Mm-hmm. Is the plan still to buy more? Or
I
and are
don't
you
know.
self-managing right now? Because I'm self-managing and sometimes I'll lose my mind some days.
Yes, so I know. Yes, self-managing is so far. I don't know, to be honest. I don't know. It's every time we say no, and then something happens, and then
Yeah.
you say, okay, one more, one more.
Yeah. Yeah, I can relate to that.
Yeah.
On that note, for newer investors that are starting out, because you mentioned you work with them quite a bit, are there any resources that you recommend that they consume when they're starting out? Anything that you recommend they do in terms of reading books, coaches, those sorts of things? Anything that you would direct them to?
Yeah, now there's a lot of material available online that you can go and study. That's good. But what I recommend the most is working with a professional, work with a real estate agent, work with a mortgage broker, someone who can help you, because in your mind you can be ready. But like I said, that in terms of what documents the bank would see, what kind of income bank would like to see, and all that, it's good to work with professionals.
Mm-hmm. And outside of screenshot documents, do you have any other pet peeves of best practices in working with yourself?
Yeah, so thing is that maintain a spreadsheet
Yeah.
for your rental, which has all the expenses, because main thing that every time I meet an investor, they say, oh, I have great cash flow. My rental income is 110,000. They're talking about the gross rental. That's not the
Yeah.
cash flow bank is looking for. So, if you have a spreadsheet maintained, then you're realistic about your cash flow as well.
Yeah. I'm diehard. Have the Excel app on my phone. Every little expense.
Yeah.
Gotta get updated.
Something that I've started doing just as I have tenant turnover is I've started writing what the damage deposit was, what date they moved in, what their current lease is, what they pay, just all those sorts of things, just to keep track of it as you move forward. Because then I can send it to you and say, this is exactly, and then you're happy with me. So
that's why
yeah.
I love you. I told you that. That's the reason. And I tell you that I have few clients that I always remember working with them, just because they make my life so easy. Is that they would have their spreadsheet in the same order as they have their T776.
Oh,
and
wow.
you're one of them, Alicia.
I don't know if I'm that intense, but like that's maybe what I'll work
No,
towards.
that's maybe I'm giving you a goal.
Yeah.
So that really is a treat to work with an investor who has 30 properties,
Mm-hmm.
and you're just indexing the application, and then you're looking at your Excel, and then you're trying to find that property in T776. So it goes in the same order. So this is one thing that it just stays with me when I'm doing an application
Yeah.
with someone.
And so to confirm, are you underwriting the files as well too, or does that go off to a different department once the application's submitted?
So we have our system is that some files are system approved, meaning that if the file falls within the policy and guideline, it will be system approved, and then it's my responsibility to have all the documentation as per bank's guideline, and then the documentation is reviewed by our compliance. So they want to make sure if I'm saying income is 150, I have documents to support it. But there's no underwriting on those applications. But there are certain applications when I need exceptions, or where loan to value is high or purchase price high, they go to underwriting.
Makes sense. Really good to know.
We talked about you not doing vendor takebacks. Is there anything else that you don't lend on, or any kinds of loans that you wouldn't do?
So mainly we don't do short-term rentals. If someone is buying a property that's part of the short-term rental property, we don't finance those properties.
Is there a particular reason for that? Is it just because the income isn't guaranteed?
So the main reason is that that's considered a commercial business, because you're running a business. So it's not that we don't finance. We would not do under the residential guideline, because it becomes more of the commercial, just because of the type of the activity.
Yeah, it's a completely different business. It's a very active versus passive business, and it becomes the hospitality versus just the residential.
Yeah. Same thing like show home. Like we don't finance show home if someone is doing a lease back on a show home, because that's in a commercial activity in the show home. It's not residential.
Makes sense. What about mobile home parks or mobile homes?
So we do.
You do mobile homes.
We
have someone we can refer business to when we get them.
But hear me out.
Yeah.
Yes. So don't get too excited. So it's as long as client owns the land.
Okay, yeah, I find it's tough. I don't know if I've seen many where it's own land versus.
So I have done a
lease
few,
land.
and I had people, realtors, who would find me calling someone because probably not many banks do it. So we do it as long as you own the land and it's on a foundation, not wheels. We will finance it.
Very good to know. There we go. Perfect. Very good stuff. I know we covered quite a bit. Anything else that you think would be valuable for the audience to know or be aware of to share?
Not just the paperwork. And then one thing that I cannot emphasize more is that work with a professional, so then you're ready and then you have an expectation that what the bank is going to look at versus what you think. Sometimes people think they're ready, but in terms of documentation and all that, they need a little bit of guidance.
For sure. Yeah, totally agree.
Perfect.
Always good to be pre-approved and have all your ducks in a row versus having a property under contract and scrambling at the last minute.
Well, time is everything on some of these offers, especially right now. A property can go the next day, so you have to be prepared to get your financing in order right away.
Exactly.
Yeah.
And sometimes realtors are not working with you if you don't have the pre-approval because they don't want to waste their time.
Mm-hmm.
Yeah, and sellers too. They
Sellers
want to
too.
know that someone offering is serious if they're not doing an all cash offer.
Yeah.
Yeah, for sure.
Yeah, definitely a crazy market we're in.
We have been. I mean, when I tell you, we waited long enough. We deserve it.
Yeah. For sure.
Very good stuff. Well, yeah, if there's nothing else, people are interested in learning more about you, getting in touch. What's the best way to go about that?
They can send me an email. My email, nazia.zebsharif@bnc.ca. They can contact me. My cell number is 403-926-5434. I'll be more than happy to work with them, help them.
Perfect. And we'll throw that down below too so that
Yeah.
people can contact you. Yeah. Well, thank you so much for your time. It was so great chatting with you.
No, wonderful,
Yeah.
wonderful.
That wraps up another episode of the Real Estate and Wealth Podcast. Be sure to hit that like button, share with fellow real estate enthusiasts, and subscribe to stay in the loop on all upcoming episodes. Get in touch with the team at Calvert Home Mortgage Investment Corporation by calling them at 1-888-752-4642 or email admin@chmic.ca. The opinions expressed in each episode belong to the individuals featured and do not represent the views of Calvert Home Mortgage. While we provide valuable insights, consulting with qualified professionals ensures that your unique financial circumstances are carefully considered, aligning your investments with your long-term objectives. Calvert Home Mortgage Investment Corporation is not a financial advisor, and we cannot advise you on making investments. There are risks to investing in real estate and the potential that you can lose all of your investment.